Hello there, and welcome back to another segment inside our profit and loss module. In this module, we're going to be talking about your expenses. And these are expenses that are below the gross profit line. These are your operating costs, also known as overhead. And these are the costs that are either direct or variable based upon, what that is. So these costs are ones that you're always going to have regardless of how many jobs you do, how many houses you frame, how many roofs you put on. No matter what, these costs are what it takes for you to run your business. So some of those things, and you'll look through the example here, and this is the same company that we've been using throughout this module. And so your expenses, as you can see, is directly below gross profit. So you have advertising, bad debt. Bad debt is going to be items that, like if a customer didn't pay you. If they weren't going to pay you, then you would write it off to bad debt. Bank charges, repairs and maintenance, insurances. You have dues and subscriptions. So let's say you use a computer program that you, actually that's on this line, excuse me. So you've got computer supplies. Dues and subscriptions would be maybe magazines or, something else that is a membership type that you need to pay every month or year. You've got loan interest. You have the officer's payroll, so that would probably be your payroll. You'll notice that the other labor is not up here in this. This is the only labor is related to your field workers, basically the guys that are out in the field actually working to create what you get to sell and make money from. So the other, admin, that's for accounting, if it's, a receptionist, those are people that are going to fall into overhead costs. The other things that you have are conferences, rent, postage, professional fees, your tax account, things like that. These are all going to be expenses that should be represented in your expense and your overhead section of your P&L. So again, it's very, very simple, and you can use the same calculation that we did for configuring your total of your cost of goods sold, actually your gross profit, excuse me. And we can look to see how much of every dollar are we using as a percentage of the sales, right? So if we do that real quick, we can do, let me pull this over here so you can see it. Let's say, okay, 137, 575, and we're going to divide that by 755, 520, I think is what it was, somewhere around there. 18%. So you've got a total of 18% of every dollar, or 18 cents of every dollar, is going to go towards your overhead expenses. So if you remember up here, our gross profit line was 186. So we've got 186 minus the 137 gives us our net income, which is, this is your line that you want to pay attention to, that we're targeting 8% on. So if our job-related costs, and let's see, total COGS is 569. So let's play around with that one and say 569, 276.52, and we're going to divide that into our total income, and that is 75%. That may be a bit high in this section, but we can do things to reduce that down, and we'll go into that into later sections where you can, take a look at, your pricing. What can you do in order to reduce this dollar amount? And there's different ways that you can do that, and one of those ways is to adjust your pricing. Perhaps you're not charging enough, to hit this bottom line of 8%. Maybe there's some adjustments in here that need to be made to reduce this. But we can go into that a little bit into further modules. But this is your expenses. So this is your net income. And so this is basically what you have left over after all of the expenses are paid. So all of your cost of goods sold and all of your direct and variable, fixed and variable costs are covered. This is at the end of the day, after every dollar is paid out to run this business, this is what you've got left over. And this is the most important number when it comes to your profit and loss, because this identifies what amount of money is going to go over into equity. So every dollar that you earn that you're not paying out is building equity within your company. And we're going to go into that, and I'll show you where that comes into when we take a look at the balance sheet in our next module. So module 9, we're going to move into the balance sheet, which is a completely separate financial statement from your P&L. And so I'm looking forward to seeing you there. I hope you found that going through this profit and loss statement is helpful in trying to understand how to read it so that you can identify the numbers within your P&L to know when you need to make a change or not. And as the months and years go by, you'll be able to use these numbers more and more to figure out your budgets, what you want to target for your numbers, and it'll be very useful to you in identifying and just solidifying those future numbers to create that profitability that you're looking for. So I will see you in the next module.